Welcome back to Investing Talk Podcast. Today, we are focusing our attention squarely on Soluna Holdings. And the critical question we're exploring, really based on the recent reports and financials you shared, is this. Is now actually a good time to buy Soluna Holdings? We've dug through a stack of recent financial statements, operational reports, technical charts too, to bring you the full picture on this green data center and AI hosting company. Before we jump into the details, though, if you find this discussion valuable, please do remember to subscribe, like, and comment. It really helps us out. Also, and this is important, if there is a specific company you want us to look into next time, please leave a comment below. We do read them. Okay, so we're going to explore the source material provided. It really maps out Soluna Holdings' very deliberate strategic transition. They're moving from primarily crypto mining into something different, right? A differentiated provider of high-performance compute and AI services. This pivot seems to be the core of the story right now. Okay, let's unpack this. Maybe start with their foundational operational story. What's the fundamental analysis telling us about the momentum behind this repositioning?
Yeah, it's quite fascinating, actually, because the numbers don't just show growth. They show a company really undergoing a pretty successful high-speed transformation. I mean, this isn't just about scaling up. It's about strategically changing what they scale up with. The speed of their top-line expansion, it's really aggressive. Revenue hit $38.02 million in 2024. Now, if you look closer, that's an 80% year-over-year increase from about $21 million in 2023.
Yeah.
80%.
80% growth. That's explosive. But doesn't that kind of expansion usually mean, sacrificing margins? Are they keeping profitability under control while scaling so fast?
That's the key question, isn't it? And they are showing pretty robust operational health, which frankly speaks volumes about management's focus here. Their gross margin over the trailing 12 months, TTM, it's reached 51.02%.
51%. Wow.
Yeah, that margin is critical. It really shows that the revenue they're bringing in is high-quality revenue. And their operating costs, well, they seem competitive despite all the capital needed for these new data center builds. And this efficiency, it's actually starting to translate into better earnings figures. Now, Look, they are still carrying a net loss. It was about Nasdaq $74 million TTM, but the improvement trend is drastic. Just look at Q2 2025. The EPS loss was Nasdaq's $0.49. Compare that to Nasdaq's $2.97 in Q2 2024. That's a phenomenal improvement.
Huge jump.
Exactly. That move towards break-even is probably the most important short-term financial story here.
Okay, so the company is managing costs effectively while delivering this massive top-line growth. Let's dig into that differentiation aspect you mentioned. They're moving beyond just crypto mining. What exactly is this competitive niche they're carving out, and why does it command that, 51% gross margin?
Right. The niche is really key to understanding their long-term value proposition. They've evolved, shifted specialization toward offering AI and high-performance compute hosting, HPC hosting, specifically for things like large language models, LLMs, and advanced neural network training. This is basically the absolute cutting edge of compute demand right now. Huge demand.
Okay, so high demand services.
Yes, but the real distinction, I think, lies in their proprietary infrastructure. They're building these energy-efficient and, importantly, green data centers. And look, this isn't just some marketing tagline. It's becoming a necessary feature if you want to attract massive corporate clients. Clients who need to train these enormous AI models without hitting ESG concerns or, frankly, just crippling energy bills.
Right. Sustainability is a big factor now.
Exactly. Their whole model is built around sustainable power sources.
Yeah.
That gives them a pretty substantial and structural competitive advantage over, say, traditional data center providers who are just pulling power off the grid.
That makes a lot of sense. The AI boom needs vast, consistent, and, increasingly green power.
Okay, but let's circle back to the balance sheet for a second.
Okay.
Revenue growth is great, thrilling even. But funding this kind of infrastructure, I mean, Project Katie at 166 megawatts, that takes immense capital. How secure is the balance sheet, really? Especially when they're carrying that $74 million TTM net loss. Can they actually afford to execute these huge projects without hitting a wall?
And that's where we need to inject some critical friction, as you say, into the analysis. That $74 million net loss, you have to see it partly as the cost of acquiring future capacity. It's a capital-intensive sector, right? So it's sort of an anticipated investment loss. The question, as you rightly pointed out, is do they have the runway? Can they absorb that loss and still reach profitability?
Right.
So Soluna Holdings is currently quite nimble, market cap around $54 million, give or take. Their debt-to-equity ratio is sitting at 79.4%.
Well, it's moderate for an infrastructure player, maybe a bit high, but not crazy. But the sheer scale of these projects, it just demands certainty of financing. You can't wing it.
So what happened recently? What was the strategic development that maybe change the risk profile here?
Yes. The critical liquidity catalyst. That was the $100 million scalable credit facility they secured from Generate Capital. That was back in September. If you connect this to the bigger picture, this financing basically de-risks their entire construction pipeline for the next couple of years.
100 million for a company with a 50-something million market cap.
Exactly. It's transformative. Securing $100 million in dedicated infrastructure capital like that is huge. And Generate Capital, they're experts in infrastructure lending. So their commitment is a really strong vote of confidence. Confidence in Soluna's ability to execute and in their whole AI green strategy. They've already drawn an initial $12.6 million, which means, capital deployment for projects like Kari is actually underway right now.
Okay, that immediately addresses a big chunk of that execution risk tied to funding, doesn't it? It feels like the market probably views this financing as sort of bridging the gap until these projects start generating cash.
Precisely. While free cash flow isn't positive just yet, which, again, you expect during these aggressive build-out cycles, the analysis strongly suggests that the combination of that strong 80% top-line growth and the improving gross margins means positive operational cash generation is, well, it's firmly expected by late 2025. That credit facility ensures they don't have to go out and raise dilutive equity at maybe the wrong time just to finish the current construction plans.
Right, makes sense. Okay, let's transition now. We've covered the financials, the strategy. Let's look at the technical action, the charts. If we pair that robust operational progress and the strategic financing with what the charts are showing, the momentum picture looks pretty compelling, right? What should investors, watching the price action understand about Soluna Holdings stock behavior?
Well, the first thing that jumps out is the volatility, extreme volatility. This stock carries a high beta of 4.36. Whoa.
Yeah. So this is definitely not a stock for the faint of heart. That magnitude of beta means basically when the market or the sector moves up 1%, this stock tends to move over 4%. But, crucially, the reverse is also true in downturns. So volatility isn't really a risk to avoid here. It's almost baked into the investment thesis itself. You have to expect it.
Absolutely. High risk, potentially high reward territory.
Exactly. But despite that volatility, the trend right now is definitively bullish. The price has shown a strong, persistent pattern. It rallied significantly from its 52-week low, which was way down at 36 cents, all the way towards its high of $4.78. And importantly, it seems to have stabilized above the $2 mark. That suggests investor commitment at these higher levels.
That stabilization is really crucial, I think. It suggests the recent news, the financing, the project announcements, it's being absorbed by the market as, fundamental improvements, not just speculative noise.
Exactly. We've seen recent surges confirming that renewed investor interest. There was an 11% jump on October 7th, for instance. And looking back a bit further, 60% of the last 30 trading days were actually green days. That's a pretty clear signal of net accumulation happening. Buyers seem to be actively adding to position.
Accumulation, yes.
So for those maybe looking at entry points, near-term support seems pretty strong right at $2. That looks like the current floor. Resistance levels are a bit tight, sitting between $2.15 and $2.22. But the real confirmation of this longer-term trend, I think, comes from the moving averages. Soluna Holdings is trading comfortably above both its 50-day simple moving average, that's around 98 right now, and its 200-day SMA, which is at $1.10.
So well above both key averages.
Right. Trading above both those long-term averages confirms the upward trend is pretty persistent and, you could argue, established. And finally, the 14-day relative strength index, the RSI, is sitting at 62.89.
Okay, so not overbought yet.
Exactly. It suggests healthy, bullish momentum. It confirms the stock's moving up actively, but it hasn't hit that territory above 70, which would signal an immediate risk of being overbought and maybe needing a pullback. So all the aggregated technical indicators seem to point towards a strong bullish disposition right now.
And technical trends like that, they don't just materialize out of thin air, do they? They're often a kind of forward-looking reflection of upcoming strategic successes or news. So if we connect this technical momentum back to the fundamentals we discussed, we see several recent strategic wins and also some upcoming catalysts that seem to be driving this price action.
What are those recent wins?
Well, looking back just a few weeks, they achieved a really significant stability milestone. They regained full Nasdaq compliance on October 6th.
Ah, that's important. Avoids delisting risk.
Crucial. For a small cap stock like this, resolving the risk of delisting is paramount. It clears the pathway for institutional funds, many of which have rules against holding non-compliant stocks. Operationally, the progress is rapid too. In September, they broke ground on Project Katie. Now, At 166 megawatts, this is their largest project to date. It really demonstrates massive scaling capabilities.
And they have customers lined up.
Yes, crucially, they've already secured 48 megawatts of hosting agreements with Galaxy Digital for that project. That validates both the project's economics and, frankly, their ability to attract major crypto and AI clients. And at the same time, Project Dorothy 2, which is 48 megawatts, is nearing its Phase 3 completion. So multiple projects moving forward.
Okay, these construction milestones, they represent real near-term revenue-generating capacity coming online soon. So what specific dates should investors maybe circle on their calendars over the next, say, 3 months?
Okay, there are three major short-term catalysts that could significantly impact the stock price, I think. First up is the Q3 earnings release. That's scheduled for November 13th, 2025. Given the EPS improvement trend we talked about and that 80% year-over-year growth, well, these results are pretty widely expected to act as a powerful upside trigger. The market will be watching those margins very closely.
Okay, November 13th. What else?
Second is operational completion. Project Dorothy 2 Phase 3 completion is expected right around November 15th, 2025, just a couple of days later. When that 48 megawatts of capacity comes online, it immediately starts generating cash flow. It fulfills their execution promise, basically.
Delivery is key.
Absolutely. And third, finally, there's a key market event, sector-wide ETF rebalancing. This one's focused on AI and clean energy, and it's scheduled for December 2nd, 2025.
Ah, interesting. How does that affect Soluna?
Well, given their positioning as a green AI infrastructure provider, this rebalancing could potentially force passive funds and large institutional money managers to buy shares to match the index weighting. That could lead to a sustained price increase, driven by flows rather than just news.
Okay, those are pretty concrete data-driven triggers. Beyond those confirmed dates, what's the noise, the speculative buzz saying about Soluna Holdings? Is there chatter out there?
Oh yeah, there's chatter, and it's notably optimistic right now. Social forums, industry insiders, they're citing potential new AI partnerships, possibly with major silicon players or maybe even cloud providers, and also talk of possible international hosting contracts. Now, success there would massively diversify their revenue base beyond just North America, which would be a huge step.
Right, reduces geographic risk.
Exactly.
Yeah.
And then there's also this persistent, though totally unconfirmed, speculation about potential merger and acquisition interest, M&A talk. The speculation is maybe from larger data center REITs or perhaps energy infrastructure players who are looking to buy an established green, AI-focused pipeline like Soluna's building. Again, just speculation. But it's out there.
Okay, that is a powerful list of positive drivers and potential catalysts. But, for those of you trying to make an informed decision, we absolutely have to balance that optimism with the risks. What are the major fundamental headwinds that could potentially derail this whole bullish thesis?
Absolutely. Knowledge is most valuable when it's understood critically, right? Especially when you're dealing with these high volatility, high growth kinds of plays. The two main risks, I'd say, are internal execution and external market dynamics.
Okay, break those down.
First, the execution profitability risk. We just can't ignore the fact that the company is right now operating at a net loss. Yes, it's improving, but this requires the ongoing success of their capital investment strategy. Building 166 megawatt projects is incredibly complex. You're subject to supply chain delays, labor costs, permitting issues, all sorts of things can go wrong. Yeah. So while management did brilliantly securing that $100 million in financing, now they absolutely must deliver these projects on time and on budget. The market seems to have given them the benefit of the doubt for now, but failure to hit those November project deadlines, for example, would severely damage confidence.
Okay, execution risk, number one. And the second risk relates directly back to that really high beta we discussed earlier, right?
Precisely. Market volatility is the second major risk. That high beta of 4.36, it's a double-edged sword, as we said. Investors just have to be prepared for potentially amplified losses during any general market downturn or sector rotation. And moreover, even with this strategic pivot towards AI, the company is still somewhat exposed to the crypto sector, right?
How so?
Well, if Bitcoin prices were to suddenly collapse, for instance, it could still negatively affect investor sentiment towards anything crypto-related, including Soluna, and potentially could even impact the utilization rates or pricing on some of their legacy hosting agreements, even if the primary revenue stream is shifting towards AI HPC. It's a lingering connection.
Got it. Okay, so bringing all these facets together then, the 80% growth, the successful financial de-risking, that bullish technical structure, but also the execution risk and the high volatility. What does this all mean for our original question? Is now a good time to buy Soluna Holdings?
Based on the sources we've reviewed, the analysis suggests an overall strong bullish rating. We're scoring it an 8 out of 10. The rationale really hinges on putting it all together. The company successfully got the strategic funding it needed to execute its high-growth plan. Margins are improving rapidly. The pivot into green AI and HPC infrastructure taps into a massive secular growth market, and the technical chart structure is currently confirming all this positive sentiment.
Okay, an 8 out of 10. Bullish. So if someone listening is positioned to actually take on that level of volatility, what's the recommended time horizon based on these findings?
Short term,
Yeah.
long term, both.
Yeah, we see kind of two distinct horizons here. For the short term, say the next few months, the setup strongly favors positioning ahead of those near-term catalysts, specifically the Q3 earnings on November 13th and an anticipated Project Dorothy 2 launch around November 15th. These are known events that could provide trading upside, assuming they deliver. But then for the long term, the company seems fundamentally positioned to capture secular growth in the whole AI infrastructure space. And it's a big if execution remains successful over the next year or two, they could benefit significantly from future market expansion, maybe increased institutional ownership as they grow, and perhaps even that speculated M&A interest down the line. That could solidify them as a real sector leader in sustainable computing.
Right. So we've seen how Soluna Holdings is actively navigating away from being just a pure play crypto miner. They're moving into being a dedicated green infrastructure player, positioned really squarely in the center of this AI boom. They've seemingly de-risked their funding for the near term, and now the story really feels like it's purely about execution, delivering on these projects. So the question for you to consider now is, how much of the risk that's associated with its high volatility and its current net loss is actually already priced into the stock, especially given the aggressive pace of project commissioning and the strategic financing they secured? Are the potential rewards worth that elevated risk profile? Especially as we approach those critical November catalyst dates we discussed, definitely something to mull over as you finalize your own analysis. Thank you for joining us for this focused discussion on Soluna Holdings. We really hope this exploration of the sources provided some clarity on the company's current status and its potential trajectory. We'll be back soon with more insights curated just for you.